So this week is really interesting with a lot of company earnings coming up. Some we've already seen and still a couple of more to be announced this week. So I thought, why not go through a couple of those big companies and that I found quite interesting. Obviously, I won't be able to review all of them, but a couple of them that stood out, such as Starbucks, Microsoft, Meta, and Robinhood. For me, very interesting one. Still coming up, Amazon, as I have obviously some shares in Amazon myself, as well as the most valuable company in the world still, Apple. Interesting to hear what they're doing with regards to AI and so forth. So yeah, still remains to be seen, but obviously I'm making that before the earnings came out, so I can't review them. But so let's kick things off by looking into Starbucks, a company I actually used to own, but then sold out of, and definitely have quite a bit of reservations about that, but still interested because I like to go to Starbucks myself, pay for those overpriced coffees, but more for the environment of being there rather than, maybe the taste of the coffee. And here we are inside of FinChat. You can see over here in Investors Relation, you have the transcript of the call, you have the report itself, but usually those reports are super detailed and long and I don't really read them. And you have the slides, so we're going to look through the slides. And the cool thing is also here you can generate AI summary. Basically, you don't even have to read through the slides and see or listen to what happened. You can literally just see basically in a summary, AI generated what was the essence of the call, which is great. But obviously, we're going to go through the slides. And one more app that I really recommend, I started listening to it recently quite a lot, is Quarter, free of charge. You download it on your phone and you can listen to all those earning calls, which is really cool because basically I was listening today while doing my treadmill run to the CEO and the management board presenting those numbers of the quarter. And that's really cool, right? To listen to the horse's mouth, so to say, and hear from the management board. And I must say, honestly, compared to previous calls when they had previous management and CEOs, honestly, I like the new guy. He's still fairly new in the job and it does take time to make changes. But yeah, previously the CEO was the boss of Chipotle and then recently he moved over to Starbucks. And here we have the slides. And honestly, you will see some slides are really quite boring, but I like the look and feel of those and it kind of conveys, in bold, big numbers of what has been going on with the company over the last quarter. So usually those companies report quarterly results and it just gives you a good idea of where the company is headed. So overall, obviously always a big number is the revenue, right? We want to see revenue top line growth. And well, it's been rather moderate, I would say, 3% year-on-year growth. It's still not bad. And of course, we can't compare it to tech companies. So in that way, for a boring beverage company, maybe 3%, given the environment, macro environment we're in with all, the challenges, maybe not too bad, actually. Their global operating margins came down slightly. And in general, 8.2% for me is really not that exciting, right? Because I, prefer more tech companies with high operating margins, right? When you look at some tech companies, they have 50, 60, 70%. So 8.2, naturally, because of the nature of the business, they are lower than those tech companies. But yeah, that's just something to keep in mind. There's less margin of error. If they had a major drop in the margins, you would really feel it at the bottom line, of course. Their global stores are still continuing to grow, over 40,000 stores in the world, and still managed to grow by 5%. And he was quite aggressive to grow those store counts even higher in the future. I'm here in the UAE. It looks like every other corner has a Starbucks already. I guess in the US it's even more. I know in Europe we still have many countries even without. You also live in Lithuania where there's not a single Starbucks around. So I guess they still have room to grow for sure. That's actually all the slides. Usually they have way more slides. So Starbucks kept it really tight. Overall, they were not too happy with their results. And well, I understand. Obviously, he's new. They are trying to turn things around. So it might take some time until they really start seeing results. It was also interesting where they talked about, potentially replacing more stores with machines and automate things, which they tried for a while. But still, obviously, they want this human element. So it's not like you start cutting all the humans out because they really want to be, the warm coffee house concept place where you go to relax. So obviously, they're still going to have some human intervention there, which also makes it difficult long term because obviously labor is expensive, right? You're going to have those unions. You're going to have a lot of challenges with that, which we've seen in the US where baristas went on strikes and so forth. So that's a challenge. Plus, of course, we know the price for coffee has also been increasing year after year and getting more and more expensive. Even though I was quite surprised, if I'm not mistaken, he said, overall, the coffee cost ingredients of the total cost is 10 to 15%. So even if it was to increase further, the margins shouldn't be compromised too much, which is a good thing. And hopefully that doesn't lead them to increase the prices for Starbucks even more, because I don't know how much is the Starbucks in your country if you have one, but here I pay around €7 for a coffee. So if they were to hike it up even further, I think it gets to a point where people really, think twice whether they should get a coffee or instead use that money to eat some lunch, right? So I think there's a limit of how much they can push the coffee price prices further up. And how did the market react to it? Well, you can see not too good actually. They were quite underwhelmed by the performance. You could see a major drop immediately following the call from almost $84 down to what is that, 76. It has recovered slightly since then. Markets just opened literally up for the day 1%, but yeah, on a 5-day period down almost 5% and year to date down 11%. So I really think the CEO is onto something. I like the positivity. I like the strategy. So I think long term they have potential, but personally I would not be investing in that company because I think there's so many pressures from geopolitical pressures, right? Even with China, if the fight between US and China intensifies, maybe one day they ask US companies not to operate anymore in China. It would be a huge loss for their business, right? The coffee prices, the human element. So there's so many factors that I think makes it very, very difficult to really grow the company and profits long term. So while I'll still be a client of theirs, I won't be investing. Next up, let's talk about Microsoft, which I just noticed actually after the earnings, which you'll see in a second, were really good. The stock price went up massively. You can see today up 9% following the great earnings that they came out with yesterday. And now it reclaimed the #1 most valuable company in the world spot from Apple. So we'll be interested to see if Apple delivers, if they will take it back or not. But yeah, now we have once again Microsoft as the most valuable company with a market cap of $3.2 billion. So this morning it was still different, but obviously those earnings were really impressive. And we'll see this over here if we go into FinChat once again. Yeah, you can see the cloud revenue alone was up 22%. So that was one of the highlights from the call. Total revenue up 15%, really impressive. And more importantly, the operating income up 19%. So while the top line grew, their profits grew even more, which is something you want to see. They're getting more efficient, more profitable. Really, really nice. And here we are inside the Microsoft slides for the earnings call. And well, it's so Microsoft. I mean, I love what they're doing, what the CEO, the vision, they really turned the company around. But in many ways, those slides still remind me of those boring old Windows times. And yeah, they're just so corporate, right? But yeah, somehow, the stigma around Microsoft, for me at least, it's still kind of, this clunky old school thing, even though they're really doing extremely well, given that they're now the most valuable company. But again, be it as it may, numbers count. And here they really delivered. You can see here the growth in constant currency. So that's the one over here. The number is 15%. So either way, really impressive to see that. Gross margin also up 11%. And of course, the operating income, as we discussed before, up 16%. So across the board, really exceptional results. And I think that's why the market reacted as it did. Really happy about these results. And yeah, I mean, kudos to them. They keep on delivering across the board, right? You see all the various, business segments that they're having. All of them are basically up. And I really like that they list all the various business segments that they have, right? I mean, so many things. Of course, the classical Microsoft Suite, 365, etc. All of those are up as well. But don't forget, they also own LinkedIn and their revenues grew by 7%. Really impressive as well. And the sessions grew by 9%. So yeah, LinkedIn is still a big social media platform that they're having. And I think not really utilizing as much as they could in the future. I think they're really going to double down on this even more going forward. And then, of course, we have the cloud business over here, intelligent cloud, more personal computing. They also have Xbox, something I completely forgot about. They also own that. Then also they have search and news advertising revenue, which is also growing. I don't know about you, but a lot of people starting to use Bing, moving away from Google. Plus, from what I understand, AI search engines like ChatGPT, for example, are using Bing data rather than Google search data. So that's also something to keep in mind and see how they can monetize that going forward. Gaming, we spoke about, search and news advertising. So really so many different business venues that they have and all of them doing extremely well. And that's why you see the results that you're seeing. Look at this, markets literally just opened as we speak, up 9.35%. So absolutely incredible. And yeah, you see over here on Seeking Alpha, people giving it strong buys because they overcame the concerns. A lot of people had concerns that it might have been a weaker quarter for them, but they really delivered and outperformed. A lot of people believe that they still have a huge room to grow going forward. Now, personally, I love what they're doing. The direction, the CEO, super sharp, switched on. As I said, not a super exciting company as such, right? They don't have all the bells and whistles like some of the other smaller companies, but they're really delivering and honestly, amazing. As an investor, that's what you want to see. Now, do I personally invest in Microsoft? No, not at this stage. I obviously do that passively through my ETF holdings, S&P 500 and NASDAQ 100. And I know it's a bit strange one because technically it's a really solid company. But when I see them already being the most valuable at $3.2 trillion, I mean, obviously it's still going to grow, right? I mean, I wouldn't be surprised if in many years from now we see 10 trillion. Why not, right? Companies continue to grow. But I mean, if I compare that to some of the companies down here that's only at 1 trillion, I just see potentially higher growth. Now, I might be wrong, right? But right now, investing in the most valuable company, it's not what I'm going to be doing. Maybe if it resets in price. Obviously, right now, it had a major price boost following the earnings. So at this stage, I'm not invested. I wish I would have invested, 10, 15 years ago, but it is what it is. But I'll continue to invest passively through my ETF holdings. Next up, we move to the sixth most valuable company in the US, and that is Meta Platforms or Facebook, which is currently up by 5% almost since the opening of today, and that's also following their earnings. Now, I have to admit, I haven't listened to the earnings call yet because usually it takes some time. So I only finished Starbucks, so I'll listen to the other ones on my next runs. But it seems also that they actually delivered quite well with the total revenues increasing year over year by 16%. So really, really strong. And here you see the operating margin at 41%, which is something we want to be seeing really nice. The slides for me are surprisingly corporate. I wish they would have been a bit more fun for a company like Meta, but hey, it is what it is. You see over here, we should be comparing, quarter to quarter, because when you look over here, you compare Q4 with last year with Q1 of this year. Yes, you see obviously advertising revenue dropping, but it wouldn't be fair, right? Because obviously that includes also things like Black Friday or the holidays, right? Where people spend obviously much more. So we should compare Q1 with Q1 of last year, which it is up massively from 35 billion to 41 billion. So definitely a major increase in growth over there. And I also like that it's diversified, right? You see here the various countries, obviously US and Canada being the biggest part, but then you have Europe over here, you have Asia Pacific, and then rest of the world. So really nicely diversified, not all, based on one or two markets. So also here in terms of net income, yes, it dropped from one quarter to another. But then again, if I compare this quarter to the last year's quarter, that's how you should compare apple to apple. We went from 12 billion all the way to 16 billion. So a major increase. And I like that they continue to grow the capital expenditure. So that's really important to use the funds that they generated, right? And plow them back into research development, new business ideas and revenue streams for the future to stay relevant. And you see more and more companies really investing huge money, especially towards AI products. And obviously they shifted away from all their Meta, which they went all in, right? That's when they even rebranded from Facebook to Meta. It looks like they're kind of departing that and really doubling down more on AI. They even now came up with a new Meta AI, like a standalone app that you can talk to, interact with. So I think that's good. It's the right way to do. They're already organically, integrating it in Instagram and WhatsApp. But personally, I haven't really been using it, but I think if they can get to roll out that app for people to really use instead of ChatGPT to get that mind share, right? When you think of AI, you think of Meta. Well, that's going to be huge for them going forward. At this stage, I think they still have a lot of catching up to do, but kudos to them for really embracing that. And here we go. Just a few minutes after going through these slides, we're already up 5.1%. So the market seemed quite positive by those strong earnings. And yeah, a lot of people are very excited. They're really doubling down on AI because for a while they went after these gadgets and other things. But I think now that they're really embracing AI and really want to be, one of the top players, contenders out there, I think, investors like that and the market seems to reward them for it. Right, with this, we move to the last company, which is Robinhood. And well, I'm probably going to make a whole separate video about this because actually that's a company I'm really excited about and potentially might be adding to my portfolio. Now, once again, of course, none of this is investment advice. It's just my personal thoughts and opinions, which I'm sharing with you. But I've been following this company for a while now, and unfortunately, I can't be using the app, so I don't have first-hand experience, but listening to the CEO and their board members, which I have done, and seeing their vision, which they want to have, and really rolling out away from just a trading app, which they used to be initially, right, to trade meme stocks or meme coins. They really want to be a global player that pretty much does everything finance related, from of course trading and investing and banking. All these things, everything money related should be done through there. And well, you'll see the slide in a second, but I really love the vision that they have for it. And so far, they're really executing extremely well against it. And I must say, they probably also have some of the coolest slides, definitely, that I've seen so far. Really detailed, a lot of content. Again, I'll do a separate video about that because I think it's maybe too much for this video. But yeah, you can see overall funded customers, for example, growing nicely, even quarter over quarter, which is good to see. Robinhood Gold subscribers, that's also growing. That's something basically like a paid subscription, which brings you additional benefits, higher interest rates, similar like Revolut, right? And in many ways, they're really going to compete with Revolut. But from the looks of it, I think they actually will steal the show and outshine them long term. But again, I might be wrong, but the way they're going, the vision, being stock listed, I think they have all the right ingredients to outshine Revolut long term. Net deposits also increasing. 18 billion in a quarter. Crazy numbers when you think about it. So really pulling in major funds. Total platform assets are now 221 billion. Crazy. So much money is flowing into Robinhood, and still, in terms of geography where they are, still not many places, right? Many parts of Europe don't have access to it. Here in the Middle East, it's completely not available. Many parts of Asia, so they still have so many places to expand to, which they do have on the roadmap, which is nice to see, right? Unlike some of the other players that really focus on the region where they're operating. Now, again, here we should compare quarter to quarter. Yes, you see a little drop from Q4 to Q1, but that's also normal, right? If you remember, Q4 was all that hype with Trump coming into office. So a lot of people were putting their money in there. And, the more people trade, obviously, the more their revenues will be. But if I compared, quarter over quarter to last year, from 618 million to 924 million. So nice growth over there as well. Here you see some of the roadmap. Again, I'll probably dive into more of that in a separate video, but I really like how they're adding new things and really have a clear roadmap, right? A lot of companies, they don't really publish it as such. So for example, they introduced Robinhood Legends, which is really, for traders. Like you have all these monitors and so forth. You can do that because a lot of people thought Robinhood is only, on the phone, but no longer. You can have really professional trading done through Robinhood as well. They have index options now available that you can trade. Now they have options tradings added in the UK. They introduced Robinhood Strategies and most recently Robinhood Banking, which I think they can really double down on and roll this out. And if they were to integrate all of those in the one app, I think it would be an absolute game changer because let's be honest, right? We all have one app for banking, one app for investing, one app for crypto, and it's all over the place, right? If they were, as is their vision, to be the one app for all your money needs, eventually you would only have one app. And I think that's really, really powerful. And I really like the way they present themselves, right? I think they really appeal to younger generation, which is important, right? Because you want the younger generation to get and start investing with them. And the longer they stay with you, well, they're just going to trust them more and leave their funds there rather than those old school clunky apps or banks. They definitely going to be losing out. So I really think they're poised to really take a lot of market share. You can see, for example, Robinhood Gold, and they're really offering attractive benefits by paying that small monthly subscription. I think it's $5 or something, high interest rates. They're also still in the process of acquiring Bitstamp, another big crypto exchange. So if they were to integrate that, I think that would also give them a leg up in all their crypto offerings. And they're also going to be launching a prediction market, which, believe it or not, a lot of people like. Similar to Polymarket, maybe you heard about that. Basically, you can bet on real life events, right? Who will be the next pope, US recession, yes or no. So it's not anymore sports betting, but you can bet on pretty much anything, right? And I think once Robinhood integrates that also, it will just be another revenue stream for them. And not everybody will use it, and it's totally fine. But the fact that you have all of those available inside the app is super, super powerful. And what I really liked also is that the CEO mentioned he wants to eventually allow private equity participation or investing. If private retail investors like you and I want to invest, for example, into SpaceX before it goes public, they want to make this possible. And I think that would be a major, major game changer if they would be one of the first companies to really streamline that and get the masses into private equity investing. Would be amazing. Even with small money, I would love that. I would love to participate in such early startups before they IPO. You can see also Robinhood retirement accounts. I guess that's mostly for the US, but they're increasing and that's powerful. Imagine you have your retirement account in a stockbroker. You're not just jumping ship and moving around your different brokers and banks all the time. If that's set up, usually people stick with that broker, right? So it's a really sticky product to have. And not a lot of stockbrokers actually do have that. But yeah, contrary to Starbucks, where we started off, quite elaborate report. You can see a lot of pages, but I'll probably dive into the company, what they do, etc. in a separate video, as I said. Though somehow the market didn't react too well to it, down 4.4%, which I'm actually quite happy with. As I said, I'm still thinking about pulling the trigger or not. I'm hoping for it to dip under $40, in which case I would definitely buy some of it. But sadly, I'm a little bit late to the party. You can see for 1 year period, up 182%. Even year to date, up 26% when the S&P is still down. Really incredible performance. And their market cap is only 43 billion. So imagine if they're really becoming global powerhouse, global bank and broker, that has a long way to grow. So yeah, I'm still hesitant whether I start adding it right now or wait for it to come down a little bit. But long term, I really like what they're doing. I think they're really competitor to Revolut and some of the other big neo brokers and banks that kind of want to be the go-to hub for all your money needs. Well, there you have it, friends. 4 companies. I know there's so many other earnings. So if you do enjoy these kind of videos, let me know in the comments down below. I'll be happy to make more of them and follow certain company earnings. I think it's kind of fun to see what's happening. And either way, I really enjoy listening to the earnings calls. I still have a long list to listen to. But yeah, I think it's really, really interesting to see how the market also reacts to certain results. And actually, in my last video, I broke down the earnings calls of Google. So go ahead, watch that video over here next. As always, thanks for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.